Global oil prices have dropped sharply as markets reacted to cautious optimism over a possible deal that could ease tensions between the United States and Iran and eventually reopen one of the world's most important energy routes. Brent crude, the main global benchmark for oil prices, fell by more than 5% on Sunday as investors responded to mixed signals from U.S. President Donald Trump over prospects for a longer-term agreement. Brent futures slipped to just under $98 a barrel, marking a significant decline from recent highs, although prices still remain well above levels seen before the conflict began. The drop came after Trump said negotiations with Tehran were moving in what he called an orderly and constructive direction, but also signaled that Washington was not rushing toward a final agreement. Just a day earlier, Trump had raised hopes of a breakthrough by saying a deal had been largely negotiated, including discussions surrounding the reopening of the Strait of Hormuz. That waterway remains central to the story. The Strait of Hormuz normally carries around 1/5 of the world's oil trade, making it one of the most critical shipping routes for global energy supplies. Since the war began earlier this year, Iranian restrictions and broader disruptions in the region have tightened oil flows and pushed energy markets into periods of extreme volatility. Analysts say markets are now reacting less to actual supply returning and more to expectations that supply could return. Industry estimates suggest roughly 100 million barrels of crude currently stranded because of disruptions could begin flowing again if an agreement is reached. But analysts caution that even if a deal is signed, return to normal may take months. Production systems, shipping routes, and refining operations could require 3 to 6 months to fully recover. Markets across Asia also reacted positively to the latest developments. Japan's Nikkei index climbed more than 3% and reached record highs as investors welcomed hopes of easing geopolitical pressure. For countries across Asia, including major importers such as Pakistan, India, China, and Japan, oil price movements are closely watched because they directly affect fuel costs, inflation, and economic stability. For now, markets appear to be betting on diplomacy. But traders remain cautious, knowing that a single shift in negotiations could quickly send prices moving again.